Welcome, everyone. On Tuesday, we talked about the difference between hobby and a business. What is all entails when the fact that you're running a business. So today, we'll be spending our time talking about choosing the right business structure for content creators. Our goal is to clarify the structure differences for you, how to evolve into the right structure for your creator business. There's no one size fits all answer, right? We consider income level, risk, goals, and how you work all matters. We will keep tax legal ideas high level and creator friendly with examples. From hobby to business part one. We have already gone through the first part of the webinar. So we talked about how is your hobby suddenly become a business? Today, we are talking about choosing the right structure. Once money is real and a constant, organization and the structure start to matter more to you. You know, why and when creator changes structure? That is $1 million question. But we can start by understanding at what point of time what more suitable for content creator. And I'll promise a simple decision making framework that have ample examples and real numbers for you. Most creators start as a sole proprietors, because you didn't go in the content creation thinking you're going to get big. You probably desire to get big. Is big means $50,000 a year, or big means $50 million a year. So you started by doing the least tax legal side of preparation. You just got in. You use your name, you use your social security number, and you probably along the way start to calling yourself to a certain brand, but you didn't even have that. You just get going. Simple, flexible. You can change your mind all the time. And the income, it is still business income, but you can upgrade your setting. So right now it's a sole proprietorship business income. For example, Philip Smith wrote and drew manga in very beginning. He was doing small independent art drawing during his early years in School of Art Institute of Chicago. So he was a sole proprietor. He would report his sidekick's income on his 1040 and under Schedule C. Schedule C is for sole proprietors. So you would file Schedule C under your 1040, then you will be calculating your income. The income under Schedule C pays two taxes. One is income tax. The other one is self-employment tax. In my example throughout today, I'm only going to use income tax as 20% of tax rate, although, of course, our income tax rate can be as high as 41.5%. So you can see that when you're doing these business as a sole proprietor, you pay two taxes, income tax 20% assumed, self-employment tax is 15%. That's not assumed. That is the rate. So your total taxes to IRS, if you made a $5,000 income, your total tax is $1,575. But if your income is $50,000, because your net profit will become $49,500, assume your expenses are the same, then you can see your income tax is $9,900 and your self-employment tax is $7,425. That gives you total to IRS fees, IRS tax liability is $17,325. So this is a Schedule C for content creators when you are sole proprietor. What makes sense to stay as a sole proprietor? Why people stay as sole proprietor? First of all, is low legal risk. You're not separating yourself from your business, so there's no risk, and you feel comfortable. And your early stage income is unstable. So as a sole proprietor, you can just see how things goes, and you don't have to do a lot of business side of consideration. The operation is simple. You don't have any expenses. Really, just about the $500 I was talking about. Really no expense. You don't have admin tasks to do. It's not like you got payroll going on, you need to pay people, other things, reporting to government with compliance. So if you are still experimenting, of course, sole proprietor is very attractive. Figure out your niche and figure out the offers, the consistency. Simple is the best. Small ad and affiliate income, occasional sponsorship, limited customer interactions, all of these become unstable. But under sole proprietorship, you're just gonna let it come. So it is not much of planning, budgeting you need. Simplicity is the greatest under sole proprietor, but it make you pay self-employment tax at 15%. Remember that? But of course, someone can argue that self-employment tax is a pension plan. It's not a waste. Of course, it's not a waste. But in the early stage, every dollar counts. If you have $1 put in business, your business go better instead of $1 throw away to the government, only available to you when you are a old man, right? So that's different. Simplicity is great, but does not create a legal wall between you and the business. That's a sole proprietorship. Stay on sole proprietorship can be a smart choice if you are focused on content and the momentum. Don't waste your money for anything complex. The trigger that make people consider LLC, what are the triggers? The triggers are contract and the brand deals. Someone approached you. Hey, I like your stuff. I wanted to do a contract with you. Higher visibility, audience growth. Man, you got 13 million under your belt. Those are triggers. More real world risk. Yes. So someone watch your manga, then commit suicide, parent sues you because you heavily influence their child working with others. You hired people. You hired overseas illustrators to help you. Those are clearly risks in the operation. Those are triggers. LLC conversions often start when contract shows up, like sponsorship contract, agency license, collaborations. So more traffic, more product, more event, more people just equals to more chances something will go wrong. So you might as well wrap yourself around, keep the business outside of you. You may want the business to feel like a real brand in some cases, so you want to create that LLC. That could be your thing. So just know that the right time can be earlier than what you think. So if the risk is rising, then do the LLC early. You don't have to wait until you make big money to do a LLC. So proprietorship to single member LLC, it is a straightforward transition, nothing changes. So you don't have to change your brand, you build your brand, you got liability protection because you got the legal wall, and you sign your contract with your LLC, not with your name anymore, and your branding is under your LLC business identity. It is easy. And you also set up the bank for the LLC so it doesn't touch your personal anymore. So all of these is a smooth transition from sole proprietor to single member LLC. But what it does it is to announce you are into other kind of legal structure. The single member LLC is a legal structure, give you the legality, give you the legal shield. But on tax side, it does not magically cut taxes for you if you're a single member LLC, as you would continue file Schedule C, and you will pay two taxes on net profit, income tax, and self-employment. Let's look at how the number goes on the single member LLC. So single member LLC still file in the Schedule C, right? You file the same way. You see, calculation for taxes is exactly the same. So you are paying $17,325 total taxes if you made $50,000 income with $500 expenses, and you pay for $7,425 on self-employment tax. So proprietorship to multi-members LLC. Why would some creator do that? What is multi-member LLC? Multi-member LLC the most often multi-members LLC are the spouses. So you got two people in the household. So one is content creator, the other one is just a cheerleader. So then you got a multi-member LLC 50-50. In my example later, I'll call the other one is an investor, then your content creator. Then let's see how tax works. So normally you need a multi-members LLC because you need a partner in business. You need the cheerleader or you need the marketer. I don't know. You needed someone. Liability protection. Of course, when you got other people involved, then you better just carve out this thing for your business, right? So it is much more needed for liability because two individuals now could easily bring in a liability. So that entity shield is important. Of course, for your contract, the contract is signed with the LLC. So it is, your investor maybe adding credibility. So the people who contract you has more confidence in you. And, branding business entity is much more clear because you can later on admit more members into your LLC, becoming a partner. So easier to manage this one big company and without getting into personal business. So the multi-member LLC, it cannot file it under Schedule C in 1040. It files 1065 under partnership tax return. This multi-member LLC can cut taxes if it is a multi-member LLC. And you file 1065 partnership tax return, and then each partner gets K1. Then they take their K1 into their 1040. Some of the K1 you pay self-employment taxes, some of the K1 because it's an investor, so it doesn't need to. Assume 50% and a 50% membership. Creator 50%, investor 50%. The income is still 50,000, expenses 500, net profit is 49,500. So K1 to content creator, it is 24,750. So for the creator though, the income tax 20%, remember we assumed it, right? Then the self-employment tax is 15%. So you can see it is 4,950 on the income tax plus 3,712.50 on the self-employment tax, but your K1 to the investor showed up as a blue here. It's 24,750 on the net profit, but pay only 4,950 on income tax, not self-employment tax. So with that said, the total, let's say the investor and the creator is one household, then your total tax is what? It's $13,612.50 comparing to before it was $17,325. You saved that $3,712.50 for self-employment tax because your other member do not pay for that. So this is where the multi-member LLC come in for content creator. So one is the LLC wanting to evolve to be S Corp. The word of evolving in tax world is called election. So we elect one entity to another. So we elect LLC to S Corp. So why would that make sense? Why would people do that? When profit become consistent, you just make $150,000 every year. Never went down. Keep on going up. So profit becoming consistent and you are paying you regularly. So as a content creator, you're like making steady income. So you want to reduce your self-employment tax. That's why you want S Corp. And you can handle more admin cost, like running payroll, doing accounting, because you got a corporation. So it's almost like, you adopted a dog and you need to take care of it. You got a corporation going on, you need to do the corporation things. In S Corp, I want you to understand, the money you make is kind of split into two buckets. So one bucket pays you as your salary, the other bucket pays you as the distribution from your profit. So that bucket doesn't need to pay self-employment tax. All right. So pay yourself as a reasonable salary, then extra profit can be paid differently as a distribution. The goal is to avoid self-employment tax at 15%. It requires consistency and the tracking. So you need to do payroll, you need to do accounting. Cannot skip that. So look at this example I gave you here. Assume 100% single shareholder creator in S Corp. So you have a S Corp, you are the only person shareholder, you create content. Your income is 50,000, your expense is 500, salary to creator 20,000. Okay? And the net profit, is 29,500. So the K1 to creator is 29,500. Your W2, because you pay yourself salary, right? 20,000. So for creator, the income tax is the total 29,500. You got that distribution. You also have the W2. So the income tax 20% is 9,950. Then the self-employment tax 15%, that is 3,000 because you paid yourself 20,000 as W2. So that W2 charges your Social Security Medicare. So that's 3,000. Your total tax creator to pay to IRS is 12,950. Look at that orange box I have there for you. That is when you are a single member LLC. You are paying 17,325. So with that, you can see why people want to make that S Corp. Imagine your creation generated $3 million. Do you want all of that goes into Schedule C to pay self-employment tax, or you want the reasonable pay to be carved out? So maybe you can make $150,000 on W2. The rest of it is distribution. So it was subject to taxes, but not self-employment tax. When and why a C Corp can make sense to some creators? Because the C Corp can build a scalable brand. A company can bring investor and partners to the C Corp. You can issue shares. You can issue the shares that is not common share, right? You can hire people and you can leave the profit inside of the company, not to take it to yourself. And you can have equity stock options. You can do ESOP. You can do all kind of business matters. This is why the large businesses are all C Corp. More complexity, more flexibility, different tax treatment. Money come out of the business is no longer something come out of your personal account. It is a absolute ultimate place a business should go. That C corporation requires serious professional bookkeeping, accounting, business planning, and budgeting. And you want to be serious with your created content. You want to not only be popular, also be big in revenue, also retaining them for a long run, then you're looking at C Corp. So let's look at the tax side of example. If you are a C Corp, assume 100% of single shareholder creator has a C Corp. So income is 50,000, the same. Expense 500, the same. Salary to creator 20,000. Net profit 29,500. Income tax for C Corp is 21% flat. Remember income tax for your personal? The first few examples we came from sole proprietorship, single member LLC, multiple member LLC, S Corp. They all use individual income tax rate, which we use 20%, but in reality, when you make several millions, you are using 41.5%. Okay, so but in this case, the corporation tax only stays at 21. So the bigger you are, the more reason you are here. So that is $6,195 taxes the company pays. Has nothing to do with the content creator. So content creator, you have the W2, then that's a 20,000. Then you have 1099 dividend. That is the 29,500 left over as a net profit minus the taxes you pay. So you got 23,305. So that is your dividend. For the creator, of course, you pay income tax on your dividend, on your W2 and your dividend. But your W2 will do the regular income tax rate, but your dividend is only 20%. So dividend tax is 20%. That's the highest rate, no increase. So that's 4,661. So your total taxes, it is 8,661. For the mathematical numbers, we had 17,325 for sole proprietor. That's our tax dollars we need to pay if we make $50,000 income. So on the single member LLC was the same. But when we were doing multiple, we took half of the amount out of self-employment. So our number dropped to 13,612. Remember that? But when we went into the S Corp, and we still did one person, we didn't make it a multi-member. It's just one shareholder. And that number dropped to 12,950. So when we become a C Corp, taxes is 8,661. So this is trending down when you have your tax structure evolved from sole proprietorship all the way to C Corp. So this is what we're trying to impress you upon with tax side of knowledge. But of course, there's other things related to, the evolution. You can't just pick the number, goes, oh, yes, I want C Corp, but you don't consider everything else. So what are the common mistakes creator makes with the entities? I want you to know so you stay away from the landmines here, right? So you're waiting for problem to happen before you think about structure. That's number one. And choosing fancy without a plan. So a lot of times I have these kind of clients. They seems to be excited with things getting very complex. Some lawyers come around, sell them such a complex structure, all the way went to the third generation. But for a creator who just started to get famous, not needed. Don't choose fancy. Make sure that the plan you take from your attorney or from your CPA is understood by you. I always tell my client that if I do something you don't understand and we stop right there, we don't do. Because at the end of the day, whatever I recommend you, it is your responsibility to know that is implemented that way. You cannot tell the IRS auditor that, oh, I didn't understand anything. It's just whatever the attorney said. That's why I did what I did. You know what, the IRS auditor, they actually automatically dismiss your comments because at the end of the day, it is your responsibility. For that reason, we don't want you to not understand what kind of fancy plan we give you. You need to understand it. So no fancy. And especially when you start getting co-ownership. Wow, you love this person. They draw just like how you do it. You feel like you will be a partnership forever. Got excited, got married too quickly, and then you got into problems. So those are the common mistakes. You must have the structure, have the entity with agreements. Mixing business and the personal money and then go to jail. That happens every day. Don't do that, right? Ignoring goals and risk. Structure should serve your goals and your risk level. And don't try to overdo it. And also don't try to wait till the problem already exists to do it. So there's a nice balance in here and go with your gut. When you thought of calling community CPA, just do it. And don't try to talk yourself out of it. Something came up again. So this is something you need to understand. That's the sign. Finding the right business advisor, finding the right entity structure, getting to know the right people, surrounding yourself with the right professional, those are your luck to run your business to a long term. You don't want to make $2 million in 1 year, next year $2 million in debt. So tax structure evolves with your business growth. From our simple example, we know the tax saving, right? As soon as your sales reaches 50K a year, your business journey would have to be accompanied with some plan for tax structure evolution. Clarifying your goals and assessing your risk. Know your number and pick the simplest fit. Build a plan with community CPA. This is your ultimate path to be a successful content creator. All right, ladies and gentlemen, this is our website. You can become our client going into this onboarding with us button. I know these content creators, You don't even get up around 11 a.m. So then at 4 a.m., you suddenly remembered community CPA, don't call us. We are sleeping. So you can go on board with us right here on our website, putting in your late night message, tell us, you're content creators and you want us, and we will reach out to you. We'll wake you up. Our office hours is from 8:30 to 5:30 Central Standard Time, 6 days a week, Monday to Saturday. So if it is off our office hours, you just go ahead, call, leave a message. A lot of times our folks are actually picking up their call. And these are our people, important people. And you saw Tiffany and the song. These are tax folks. And Eileen Kwan, they are accounting, sales tax, payroll people. And Dan Kim, client services. Anything you need, you can reach out to him. And Derek is our IT partner. So if you enjoy our technology, and credit goes to Derek. And Steve Howe, that's Dr. Howe at our firm, and he's in charge of that legal compliance piece of our firm. We have lawyer and Stephanie, attorney Stephanie, is a business lawyer. She graduated from Stanford Law School and has been in practice for 4 or 5 years by now. And if you have any questions, and she is the best business lawyer we know, and she will take care of you. And these are the 2 books I wrote already, and I have 2 more books coming up. You can buy them on Amazon and our website, our YouTube channel. We deposit all of our YouTube videos here, so you'll find us. And just keep in mind that this webinar is for education purpose only, so it's not really constitute to be a advice to you on the tax, legal, accounting side. So if you're really looking for that and you're such a successful content creator out there, ring a bell, give us a call, and we'll be there for you. I'll see you sometime soon. Bye bye.